Hi, Tim Smith of the Smith Group bringing you our October market update, market trends, data statistics. We know it's a little late. We have 100 analysts that are just grinding and torturing data, and you know what they came out with? Nothing. It's the same thing in the world. You talk to anybody, one guy says this, one guy says that. If we're all thinking the same, nobody's thinking. So the only thing I want to talk about today is our October update. The only relevant data point to me today, and I understand I'm going out a little freestyle, is that today we are sitting at 3,605 total properties on the market in Orange County, which is about 30% below the last 10-year trend and about 40% below the last 3-year pre-COVID. Demand is also very low, and this is the bad thing. It's the lowest it's been since October 2007. Now, anybody that I talk to, and I'm talking to everybody, at least up through a few weeks ago, because now it's time for me to go with my gut, I get a mixed review. I get people clumping our real estate market into the overall tilted economy. Interest rates are ticking up, inflation's ticking up, all of these things that are creating a slowdown, which we knew when the year started to mitigate stagflation, which is the fear for everybody. The government had to throw us into this volatile interest rate rising environment, which is slowing the overall economy and slowing the real estate markets. However, I'm gonna take the overall real estate market and I'm gonna take coastal Orange County, not even include Orange County out of it, because you can't clump it together. The reason I know this, we had a carjacking a couple weeks ago that ended up in my neighborhood in Dover Shores. The reason I tell you about it is when I was driving home from an appointment in Dana Point, I saw 3 police helicopters, and I didn't count them, but there were over 50 squad cars, SWAT, for a 24-year-old carjacker that had put himself somewhere in the neighborhood to hide. We spent millions of dollars to protect this perfect little bubble that we live in, that in the last 10 years, we've seen an increase from 10 to 12% of the buyers that are coming into our marketplace being from out of state to the last 3 years, almost 50%. It's not a secret anymore. People want to be here. Safety proves it. Lifestyle proves it. We have the best coastlines. We have the best lifestyle. We have the best climate. That will not stop. But we are in what would look like a standoff, a Cold War. Inventory's low, demand's low. Who's gonna win? I'm gonna tell you who's gonna win. Orange County real estate prices are going to continue to go up, because when everything out there, as volatile as it is, people will continue to come here. As it gets crazier, this has become a safe haven. And so all you that are listening, understand that my prediction is we are in a slowdown, and instead of trying to figure it out or lowering your prices or trying to be the buyer that wants $3 million under list price, understand that as we get through the midterms and as we get into next year, demand will pick up because we have no inventory, and we can talk a little bit about that. All of my friends, which are my demographic, young families, you bought your house for 1.7 to 2 million 10 years ago. You put $1 million loan on it. You have under a 3% 30-year fixed rate mortgage. For you to move, you'd probably have to step up double in price. So you're going from 3 to 6 million, which would mean at least double in a loan. But the kicker is it would be double the interest rates. Interest rates have gone from 3 to 7%, which is scary in this little microclimate, but 7% historically is still not that scary. And when you think of all the things we're concerned about, the best place to invest is in your home and in your family. I get it. One thing that we've seen also since the whole COVID environment, in the ultra luxury, and I'm gonna use this as almost like the grunion, right? The grunion come in, they check out the beaches, then everybody comes. In 2018, 19, and 20, early 20, we saw about 5 or 6 homes a year sell over 25 million. Since then, we've seen 14, 16, and this year so far, 15 with 5 in escrow. We are seeing more deals in the high end because the wealthy, the successful, that now are working somewhat remotely, they know where they want to be. We're getting buyers from all over the US, all over the world, which is very new for us. And I think this has everything to do with what's my alternative option. I could live in LA, I could live in New York, I could live in Miami, but when you really think about how you want to live, there's a lot of concern for those areas, and that's why people are coming here. So instead of being a normal market update, what I'm saying is it's almost like we're standing here and we're in the midst of a war. Everybody's talking about it. We're in the trenches. So I'm getting up on my horse like William Wallace. I'm calling all my agent counterparts here in Orange County and those that are coming from LA. We need to band together because we need to protect the values, which they're going to stay. There's intrinsic value here now, not just for today, not for this year, but forever because of what our county offers. So the John Stanlins, the Rob Guillaume, Steve High, Evan, Tim Carr, Chris Burgandy, whoever you are, Rex, Marcy, we need to work together to protect our values because people will come. Now, in this interim, as interest rates continue to tick up next year because we saw job growth, which from what I understand from the report last week, shows that the Fed will raise interest rates again. So that is going to continue the slowing through the rest of the year. However, instead of freaking out, turn off your TVs, stop looking at your stock portfolio, which you don't need to live anyway. And what I want you to focus on is figuring out to live the best life. Work on your golf swing, go work out, go surf, go fish. The fish are hitting. Take the time now to retool, sharpen your saw, so when the demand comes back, which it will, just like if you're a surfer, you can go out there and paddle around. If there's no swell, there's no waves. If there's no deals, there's no deals right now. Don't be scared. Sellers, what can you control? You can't control demand. You can control your offering, you can control your price. My recommendation is not to lower your price. That could get you to a deal. We have not seen prices anywhere in coastal Orange County that you can show me the data that they've come down from last year, last month, last quarter. So what you can focus on is what you should be rest assured. You can focus on who's representing you, how your house looks, and what's done marketing-wise. Buyers. I don't know what's happened with buyers because over the last 5 years, they'd give anything to have an opportunity at deals they're looking at now and homes sitting on the market, which we'll talk about. Buyers, understand the ROI in a house is not if it's gonna go up and down, it's the memories you're making with your family. It's the ultimate safe haven for all of the craziness in the world. Buy the house that you want and bet on you. You will be able to afford, even if it's 6.5 or 5.5, bet on you and focus on being around people that inspire you to be your best and help you grow in every aspect of your life. The other thing I want us to talk about for a second is days on market. Days on market have increased, but they're nowhere near where they were pre-COVID. We just have these lenses from COVID where everything came on the market, multiple offers, over list price, the first month, the first week, whatever. We're in a normal market. It takes time to match the perfect house with the perfect buyer. Find the perfect buyer. Wait, stay focused. Don't be stressed out about it. Investors, I still think it's a great opportunity to invest, but I think you have to be a little bit more diligent about your strategy. My prediction for October's update, prices will go up. I've been through every different real estate economic forecast data, and when you put them all together, it seems like there's no consensus on what it is, but I know what I know, and I'm seeing the deals that we still have in escrow. All of them are higher than last month, last quarter. Demand is slower. Stay the course. Spend some time with your family. Slow down a little bit. Remember the time in COVID when 50% of your schedule was knocked out and you got a little more time for you, your family? Take that time now, retool, sharpen your skill set, and know that pricing, as we get through this interest rate peaks and they start ticking down, demand will follow and we will see that swell that I've been predicting for the last 6 months. If you want to talk further, And it's not talking about trying to tell me how the market's gonna be, but we wanna talk about strategy. I am here for you. Follow our link, reach out. I'd love to chat about what we can expect over the next couple of quarters.